Hello and welcome to another episode of the Business of Business podcast. This is your host, Roy. Of course, we are the podcast that brings a wide variety of guests to the table to talk about a bunch of diverse topics to help our businesses out there do better. Maybe there's something that some product or service you weren't aware of, or maybe even you're having a little trouble and looking for somewhere to turn. Hopefully, we can help you answer the question. And today, we're lucky we have a gentleman that stopped by to talk to us, Josh Kim. He is with 7A Accelerator. And I'll let Josh explain it a little bit more, but basically, what he deals with is helping people get SBA loans through their 7A program. So, without saying much more, Josh, welcome to the show.
Yeah, thanks, Roy, for having me on.
You bet.
It's great to be on, and I'm really glad I'm here to share some information. A lot of business owners they're so busy running their business, just trying to keep busy with everything that's flooding them. They're not necessarily hearing all the incentives are out there with the SBA and all these different business loans, and that's kind of why I started 7 Accelerator, because I've got a good breadth of knowledge in the space, and I really think that people don't pursue what they don't know about. And so, the
Yeah.
more people we can educate about what incentives the government has in place for small business owners outside and above, the EIDL, the PPP, the other disaster relief stuff, the more businesses we can help, the better it is for everyone, right?
Right, exactly. Yeah, and that was what caught my eye, when we first started talking is number one, you've got an interesting background I'm going to ask you to talk about, but also, being able to look for funds. A lot of places we feel like we're coming out of this pandemic and
Yep.
businesses, I'm based in Texas. And so, we are going to open up next week. And so anyway, there's some businesses going to be looking to see how they can, get back on their feet, maybe grow a little bit. There may be even some entrepreneurs that have decided to not go back to work, that maybe they want to buy a small business. So I think it's a very timely topic. But if you don't mind, before we get too deep into the SBA, tell us a little bit about your story.
Yeah, so I've got a pretty interesting background with dealing with SBA loans. I actually purchased a business, my first business at 19 with an SBA loan. And I was really just frustrated with the lack of resources and information that were out there around how you go about getting an SBA loan, either for, not even necessarily for a business purchase, but just for a business in general. There's 3,500 plus lenders that work with the SBA. Primarily banks. There's a handful of non-bank lenders that do, the 7A and 504 loans too. But I was just really frustrated at how hard it was to just navigate, because it seemed like to me, every bank you talk to, they give you a different answer. I just dealt with a situation today. I mean, I actually, I had a situation where I knew it was wrong. I just had to double check with the SBA, but a banker who's been doing SBA loans for 10 years gave me, bad information about a client we were working with.
Wow.
And so unfortunately, that's what happens with a lot of business owners. They get a bad piece of information from a banker who, they had bad information, or whatever the case might be. They throw up their hands and never want to pursue it again. So, I knew for a fact that I was able to, go buy a business with the 7A loan, but I really had to go talk to a lot of lenders before I figured out the ones that really understood, how the program works. Because you could go out there, you could call all 3,500 lenders, but the number of good lenders out there is probably less than 100. And so, that's kind of what struck me as really frustrating. So anyway, ran those businesses for a bit. Recently sold some off, and more focused on this full time, because I just realized that, this is my skill set, it's my wheelhouse, and me being involved with the business owner for only a couple hours, I can save them months of time in going through this process by, approaching the right lenders to begin with. So, back to more of my story, like I said, I bought a business. I actually bought three businesses with SBA loans before I turned 21. And, what I found out was that every single bank out there has kind of they have a different criteria, different little credit box. And so, it's not like going for an FHA mortgage where every lender you go to, they're going to have the same strict exact guidelines. Every bank, even though it's the same 7A and the same 504 programs, they're going to have a little bit different approach in how they underwrite things and how they approach things. And so that unfortunately screws a lot of people over, because they, like I said, they get bad information from one place and they just take it to heart and they just never try it. So, but yeah.
Yeah, and that's the one thing. It's a good and a bad about dealing with the government is they've got some good programs. It's usually just a lot of red tape wrapped around it. And if these lenders don't have somebody that's dedicated to that full time, then it produces that bad information and kind of sours people's, uh, uh, from pursuing it more further or again. But also, this is actually a pretty good deal for the bank. So you think that they would take a little more interest. But let's talk about for a lender, what are some of the good points about why you would want to go with SBA versus maybe going a traditional lender?
Yeah, so I guess from the perspective of the lender, the reason lenders really like these SBA loans is that it minimizes their risk. The way that the SBA works is, they're guaranteeing a significant portion of the loan amount. So normally, in normal times, it's actually 75%. So if you go get a loan of $1 million to your business, the SBA is guaranteeing 750 grand of it. Right now, until October, and I guess we can talk to some of the specifics on this later. One of the unique things that they have right now is actually the guaranteed percentage is 90. So if a bank makes a loan for $1 million, they're only really risking 100 grand. And so for situations where there's a collateral shortfall for a smaller business, which is almost always the case, right? It's a great option for the bank because they can look at it and say, okay, well, the cash flow is here to cover the monthly payment on the loan, but we don't have the collateral to fully cover, the unsecured portion. And so for them, they look at the SBA as a great option because they say, okay, well, we can minimize our risk, with these guarantees. A fun fact is the SBA as a government division, the way they work is they just charge a fee on every loan they make, between 3% and 4%, they charge a loan of that to every new loan. Those are also getting waived right now, but they just accrue all those fees and they use it to pay off the bad loans. And so it's actually a very, for the banks who understand SBA and they do it well, it's a very profitable division for the bank. So as far as the motivations for the bank go, it reduces their risk. It allows them to, help businesses grow, because if that business grows, the guy who owns the business, he goes from making $200,000-300,000 a year to, $1 million, $2 million, $3 million a year, he's going to be keeping all his money probably at that bank. So it's a great way for them to, advance capital to business owners who need it to grow, so that person can, build up more money with the institution, buy other banking products, but it also has minimal risk for them because it's predominantly guaranteed by the government. And it's a great option, on the flip side for borrowers, because a lot of times, if you want to go buy a business or you want to, get extra capital for your business, most situations it's not going to be fully secured. And so, the terms on unsecured debt elsewhere, if you go to some of those lenders online, they're sharks. They want 18, 24% daily paybacks, hidden fees that can amount to tens of thousands of dollars on a relatively small loan. And the reason, obviously the reason SBA loans are such low interest rate is because they're government guaranteed. Right now the maximum you'll pay is about 6%. So, the prospect of getting over $1 million unsecured for under 6%, it's, you can't beat it. So those are kind of what the motivations are, I guess, for the lenders and the borrowers. It's a great option for all parties.
Yeah, and I guess as you mentioned, with this, with online commerce and everything else that's going on, it's also, I think you can, as the borrower, you could probably rest a little easier with the SBA behind this, that you're not going to find yourself in a bad situation once you sign the papers. There's a lot more trust there as well.
Yep. No, yeah, that's
So,
great.
Yeah. So you mentioned a couple things. You mentioned buying a business, and you mentioned, some working capital. What are the, what are some things that the 7A program will cover if you are a, business person or want to buy a business? What can you do with the money that they loan you?
Yeah, so that's actually one of the biggest questions that I hear from people is that are like, what can I do with it? I hear you can only buy real estate or do real estate improvements with it. For the 7A term loans, and I'd kind of lump them into two types of loans. You got 504 loans; those are just for real estate, so real estate purchases, real estate ground up construction, renovation, tenant improvement, fixture improvements, all that. The 7A loans, those are the more general ones. You can use that to buy a business. You can use it to buy out a partner. You can use it for general working capital. You can refinance debt. You can obviously use it to buy real estate as well. The rates on 504 on 7A are usually a little bit higher than 504, but there are certain benefits in certain circumstances where 7A, even though it's a little bit more expensive, is preferable to a 504. But I tell people, like, as long as you have a legitimate business need for extra capital to grow, whether it's to buy, buy equipment. Like I'm working with a guy right now. He's got a software company, and the software he deals with is managing. He sells his software to companies who need to manage remote employees. So with COVID and everything, the demand for their stuff has gone through the roof. He needs to buy a few $1 million worth of servers to actually accompany the increased demand and bandwidth on their infrastructure. They don't have enough bandwidth on their servers to keep up. So he's basically just going to go take all his SBA money and just go buy more servers. I've also seen situations where partner buyouts, business acquisitions, there's a lot of different things you can do with it. But what I generally tell people, I said, as long as you're not going to go take the money and buy a boat for yourself to go, vacation with, it's probably, considered an eligible use. Obviously read the fine print, make sure it works. But yeah, I mean, it's a great option for just, I got off a call with a guy earlier. We're going to be working with about 200 to 300 e-commerce businesses that are all doing about $100,000 a month or more in sales. They're trying to grow their credit lines. And a lot of business owners, they just try to bootstrap their business growth with credit cards, and it's great, but after a certain point, American Express's limit of $50,000, $100,000, it's only going to take you so far. It doesn't matter what your business is, whether you're a contractor, whether you've got an e-commerce business, a doctor, a lawyer, you need outside capital, and so that's really what's great about these SBA loans. I mean, it's not. I will tell people, if you need capital in a week, it's not the fastest option in the world, but it's by far objectively the best long-term permanent capital solution for a small business. Cheapest rates, best terms. But yeah, I mean, you can pretty much do anything with it.
Yeah, and here again, that's another good point to reach out to an expert like yourself before you wade off into this and get too far down the road, and make sure that this is something, number one, that you can use the funds that they give you for what you need to, and get some advice up on the front end before. Because I know anytime you deal with the government, there's going to be a lot of paperwork that goes along with that.
Well, I'll jump in there. It's actually that's probably one of the other big misconceptions about SBA loans is that they require a ton of paperwork. If you go for a regular 7A loan, there's actually only two forms that are SBA specific that you got to fill out. One of them is a personal financial statement. So whether you were applying for a mortgage with the government guarantee or not, you're going to have to fill out a personal financial statement. They just like it being on the SBA's form. And then the other form they have is what they call, it's just a borrower information form. So just basic information about yourself, like, your ethnicity, your nationality, all that, how many jobs the loan will support. And that's how the SBA really, they gauge their success, is they take all that data, like how many loans were made to this ethnicity, how many jobs are saved. And it's basically data mining for the SBA, so they can keep track of, how much of an impact they're having in helping and supporting jobs. So, but, I tell people it's one of the biggest misconceptions too. If you have a full loan package ready to go, you've got all 3 years of your business and personal financials together, you've got your budget, you've got your 2-3 page business plan narrative on, what you need the money for and a little bit about your business, you can get an approval within 2 weeks. And if you have all your ducks in a row, you can close in 3 to 4 weeks. Usually what takes a lot of time is, again, I hate to keep beating a dead horse, but working with the wrong bank. Like you said earlier, the bank said it's not their specialty. So they've got a bunch of knuckleheads working on it who, they're also trying to sell you credit cards and, traditional mortgages. It's not their core expertise. So, they're going to be kind of stumbling around in the dark. And, the other issue is usually a lot of times closing delays a lot of times fall on the borrower. They can't find their LLC formation documents. They can't find a tax return. They can't find a copy of their lease or an insurance document. So as long as you have all your stuff generally available, and that's kind of where working with someone like me is helpful for a business owner. I kind of tell them all up front, like, here's everything you need to be working on now so that it's not holding you up later. Because if you have all your ducks in a row, I've seen loans close in less than 50 days from application to approval. But it's usually a combination of, either a lender who's not on the ball or, a borrower who doesn't have all their stuff together. But yeah, it really doesn't take as much paperwork as you would think.
Okay, no, that's awesome, because that was actually, I was fixing to lead into the, what are some of the other misconceptions about the SBA loans, but I think you covered it, unless you had any more points you wanted to make there.
Yeah, I think some other misconceptions, a lot of people think, my business isn't eligible. I'm not, either I'm too big or I'm too small. The size thresholds for SBA, I mean, if you need to borrow anywhere between 25 grand and 5 million, you can take advantage of SBA. I have a situation, a friend of mine, he's actually getting more than that. He's actually getting 5 million from an SBA credit facility and 3 million of a traditional financing from the same bank together. So, he didn't actually think, before before, I kind of came to it, he didn't think that SBA financing was going to be suitable for his business and the growth and kind of what they needed. But, he found out, well, hey, this is actually an option. And he'd been running his business for 20 years. And unfortunately, there's a lot of situations like that. People just don't realize like it's a suitable thing. Another big misconception I think is that, you need to have a ton of collateral. It actually says explicitly in the SBA's SOP for the 7A program, a lender cannot decline a borrower's request for a loan solely based on inadequacy of collateral. And so obviously I got $1.2 million at 19 years old with 20 grand in my name, because the business that we were purchasing was a good underlying asset. They weren't looking at how much equity I had in my house and this and that. And, again, a lot of that comes back to the bank. If you go to Wells Fargo, they're going to tell you we need X amount of collateral coverage on this loan. That's not the SBA policy. That's just Wells Fargo policy. So, that unfortunately lenders do a disservice to a lot of borrowers by reinforcing some of those myths and misconceptions, because they tell them, oh, this is SBA's policy. And most borrowers, they're not going to go take the time to read through, 300 pages of an SBA SOP like I have. But yeah, I mean, that's another big misconception. You need a lot of collateral or cash to go get an SBA loan. Really, I'd say those are the two biggest ones, that you need a lot of cash or collateral to get one. And it takes a long time and it takes a lot of paperwork. And both of those they're not true. If you work with the wrong banks, obviously all the misconceptions become true. But if you work with lenders who really know what they're doing, a lot of those problems go away.
Okay. Are there some instant red flags that if somebody, was out shopping for the SBA lender, are there things that can be picked up on in a quick phone call that lets you know that you're not at the right place?
Yeah, I would say so. There are a couple of things that are hard stops that make it really difficult to get SBA financing. I'm actually kind of dealing with this situation right now. So I'm dealing with a borrower where she was actually a co-signer for somebody else's student loan. And so we're having to navigate it. Luckily, it's not a big deal. Her business, she's making about 300 grand a year off of it. And it was an old student loan that was supposed to she was supposed to be absolved of the liability of it through a couple things. But long story short, 5-6 years ago, defaulted, charged off. There's like a $9,000 liability out there. And because it was a federally guaranteed student loan, if you've ever defaulted on or had a loss on a prior, federally guaranteed finance instrument of any kind, business loan, personal loan, FHA mortgage, student loan, whatever, you're going to have to get that current before your SBA financing goes through. So we've already told the bank about like, hey, this is kind of what happened. So they're actually having to run a check to see if it still shows up on her record or if she was actually taken off of it before it went into a default, discharged or charged off. But in her case, it's easy because she can come up with the $9,000 just to pay it off. That way she's clear, free and clear. Also tell people, like if your business is a technology based startup that has a burn rate, you don't have a clear path to being cash flow positive, SBA loans are really not going to be a suitable mechanism for you. That's kind of more where the venture capital world comes in. It's innovating and it's betting on a new product and the market adaptation for that. SBA loans are really meant for, fundamentally sound businesses that have a product or service that have already been proven and, are cash flow positive. Now, not to say they do startups, but it has to be a startup where there's a very clear path to within the next 3 to 6 months. We're going to get this thing opened. We're going to be cash flow positive. SBA is great for franchise startups. If you need capital to start up a franchise, SBA financing is a great way to do that. But yeah, I mean, it's, if your business is fundamentally never cash flow positive or has not gotten there yet, you're going to want to wait till you've had some positive cash flow before you can really take SBA financing. And then, obviously credit is usually a big thing. I mean, they don't have a huge requirement. As long as your credit's above 650, you should be good with most lenders. But if you do have credit issues, it doesn't necessarily preclude you from getting an SBA loan. It's just something you're gonna have to go engage a credit expert, help prepare your credit, for, call it 30 to 90 days before you go get the loan. Because they do a hard credit pull. And a lot of times, as much as they would like to make the loan to you, there are hard lines in the sand that are SBA policy on minimum credit score. So, but yeah, I mean, I'd say as long as you have a cash flow positive business, you've got decent credit and, you don't have any outstanding liabilities to the government, student loan, old FHA mortgage or other business loans, you should be fine. Most people would be able to qualify. And it's kind of interesting. I'll tell you that, the reason that I'm, talking to guys like you and, trying to talk a lot of audiences is, I think that really only maybe 5 to 10% of business owners in the country really know enough about SBA to really take advantage of it. You've got a large portion of them. They hear one bad thing from a friend or a banker or somebody about, they had a bad experience with an SBA loan, cements that in their head and they never try. And
Right.
so, that's that's one of those things that, a lot of people, they never try. We're sitting here talking about what are the barriers. I think the biggest barrier too to also add is people they never pick up the phone. They never try it. They don't think it's suitable for them. And so they never apply. But yeah, most businesses would apply as long as you're cash flow positive and you've got decent credit, you can get SBA financing.
So what about caps on the program? Do they, is it pretty much open? They'll take anybody that comes through, or do they have like X number of dollars that they lend per year and then cut it off?
Yeah. So to my understanding, they've never had issues with like going over the allocated dollars federally. Basically the funding that the government puts in place for the 7A program. Well, I guess, first of all, the 7A and 504 program as a whole, like they're designed to actually be a break even, right? Because they're charging guarantee fees that goes into a pool at the SBA and they use this to pay out losses. So in most years, obviously 2020 was a big exception for a lot of reasons, but most year the SBA office, they operate at a budget surplus. They actually make money, which is kind of crazy. It's a government agency that makes money. Between them, the patent office, and maybe one or two other things, are the only divisions of the government that actually make money. But yeah, there's very rarely an issue with them doing that. Now, I will say there are borrower caps. So the way it normally works is normally through 7A, the max you can borrow is 5 million, because the maximum amount of federally guaranteed dollars that they determine can be assigned to any one person, it's 3.75 million. So 75% of 5 million is that. The way 504 loans work are a little bit different. On a 504 loan, the government's really only guaranteeing about 40% of those, because they're primarily for commercial real estate. So I guess you just got to do the reverse math. It's like 9.4 million or something like that is how much you can borrow if you go through 504. But yeah, I mean, most people, they'll be able to, they shouldn't have any issues with, taking advantage. And even if they do, I mean, there are a lot of lenders who will, I wouldn't say a lot, there's a handful of lenders who will do 5 million on SBA, and then they'll do 3 million conventional, provided the deal's strong enough, they like the business, they understand it, all that.
So let's speak to some businesses that are out there today, maybe struggling. Well, we could take a restaurant. There's two situations, I guess. Number one is there's an owner, it's kind of struggling. Things are opening up, looking better. What is their situation going to be? Are they going to have a good chance? But then also, let's take the the guy that wants to buy a business that may be in trouble. I'm sure not terrible trouble, but let's just say borderline. Will they loan on situations like that?
Yeah. They're obviously going to want, the real, during normal times, the way the banks are looking at it is they're looking at 3 years historical cash flow, just making sure everything covers. Obviously coronavirus has been something that has just thrown everything for a loop. And so most of the lenders nowadays, they put like 95% of their underwriting weight on how the business performed for 2020. So, in the event that you've got a business owner who's wanting to try to buy another business that didn't do well through 2020, they're really, really going to have a clear reason as to why them taking it over is going to make sense. It could be something as simple as, hey, the owner of this business was essential to the operations. They caught COVID themselves and have been incapacitated and out and not able to do it. And, the person wanting to buy the business was one of the managers of the company. Like, that's an easy situation. But I would generally say more of the situations that are more common to finance with SBA, a business that's looking to grow, a business that, needs capital to invest in, real estate or assets, like, the IT company that was looking to get, servers.
Maybe even like a transfer of ownership from a parent to a
partner
kid.
partner buyout, business acquisitions. Most of the deals that they're financing are not like turnaround situations and problematic stuff. It's either a business that needs capital to scale, or someone needs capital to take over a business that was doing okay. Those are most of the situations. I mean, obviously there's real estate purchases, real estate renovations, those types of projects. But I would say, like, if you're looking at a business that went from a positive to a big negative in 2020, you might be better off just negotiating something directly with the seller, just having the seller finance it versus getting outside bank financing. Because a lot of banks right now, even though that there's 90% government guarantees and all these other things, that they still have to have a reasonable, credit request in the loan file showing like, hey, the projected cash flow here is enough to, to cover the debt service. So.
Okay, so you talked about that typically the they covered about 75%, and now that's up to 90. Are there some advantages or incentives that are happening right now versus in normal times?
Yeah. So the three main incentives they have there right now. So obviously the 90% guarantee is something that is going to be more of a bank facing benefit. And, indirectly it benefits the borrower, because if the bank has a 90% guarantee, they're going to be more likely to approve a deal that at a 75% guarantee they would not have. I actually have heard that verbatim from some of the lenders I talked to. They straight up said, this is a deal, we're only going to be looking at these kind of deals because of the fact that we have a 90% guarantee. If we did not have the 90% guarantee, if it was normal times, we didn't have COVID, a 75% guarantee would do. But there's still a lot of uncertainty on, how long it's going to take to get the vaccine rolled out, how long it's going to take for some of these states to fully reopen, how long it's going to take for consumer behaviors with traveling, and whether it's interstate, intrastate, or just general travel, how long that's going to change. So that's one of the big benefits. There's 90% guarantee, obviously. The other two things are, and I think I touched on this earlier, but right now with the stimulus package they passed in December, all they did is really extend the initial CARES package. The initial CARES package did a lot of these things too, but the December stimulus package added it, or it extended it. Any new loan that is made gets 6 months of free payments. I'll qualify that. As of today, as I speak, it's 3, because they're not sure if the amount of money that they initially did it for 6 months. And then the money that, they had concerns if the budget was going to be able to meet, but the $1.9 trillion stimulus bill is adding more money to the SBA pot. So it's widely expected, anticipated that all the new loans will go back to being able to get 6 months, but new loans will be able to get 6 months of free payments towards their loan up to $9,000 a month. So that's $54,000 up to of free payments that are subsidizing your loan. And they're also waiving the guarantee fee. And, even though it's only 3.5 to 3.75%, give or take, on a few $1 million, that adds up. $2 million, that's almost what, 75, 80 grand. So those are the two big benefits. And so I actually break down the math for people on, on potential clients that we're working for, but generally speaking, it's actually about 10% of the total loan amount you're saving between the subsidized payments and the waiver of all the guarantee fees. So if you have a loan of $500,000 that you're getting, between the guarantee fee waiver and the free payments that they would be covering, you'd be saving $50,000, which is 10% of your loan. It's pretty crazy. So when I tell people the government is actually paying you to borrow money, they say that's crazy, that's not right. And then I showed them the math. I said, no, they're actually paying you. You could technically take a loan, have them pay 6 months, and the balance you'd have on the principal would be less than you started, and all the payments came from the government. So obviously, I don't think that's usually worthwhile for people to do. There's a lot of headache and pulling all your stuff together just to save a few grand, but technically you could do that. So
yeah. Okay, yeah, and so we've talked about a lot of things that make the SBA more looks like a better option to go through. So have we touched on all the comparison between all the financing options? Is there anything else you'd like to touch on that?
Yeah, I'd really say, you've got SBA 7A that encompasses the regular 7A loans, the SBA 7A small loans, basically anything under, call it 350K. You also have the SBA Express loans. SBA Express loans are great too for most people. They can be structured as lines of credit. You've got the SBA 504 loans. Those are more for real estate. SBA does also have some other unique programs that, they have cap lines, community advantage, international trade, export working capital. Those ones are a lot less, leveraged, I think, because, the terms on those are basically the same for most of the SBA stuff. So, an SBA, the only difference between international trade and a regular 7A loan is, the use of proceeds is a little bit more limited, but you're getting the same interest rate, same guarantee fees, the same maximum loan amount. So for most borrowers, it's not too much of a difference. However, I will say, if you did compare it to what conventional financing options are out there, everything is going to look inferior next to an SBA loan. And obviously the reason for that is no private lender is going to be able to compete with a 75 to 90% guarantee from the federal government on a business loan, so that's what I would tell any business owner is, you can go out there and, there's probably other financing options, but you're going to be paying 12 to 25% interest. Your loan term is going to be 3 to 4 years, not 10 years. And, you're going to get hit with all these fees and all these restrictions and covenants. SBA, as long as you pay the loan, they don't have any covenants. Just pay the loan and send them your tax returns at the end of the year, and that's all they care about. So, it's really, when it comes to apples comparison of the financing options that are out there, nothing can compete with SBA.
Yeah, well, that's good, and I appreciate you coming on the show to educate people. I think that's a lot of things we've talked about have probably just kept people away for probably a good deal, and so this will be a nice little wake-up call for the listeners out there. Anybody that's wanting to either purchase a business or maybe get some capital for growth, this should be a great option. I'm going to ask you, a couple things in a minute, but before we get to that, so what is a tool that you use in your daily life? Like could be a tool, it could be a habit, a ritual, just something that you do every day that you feel like really adds value.
Could that include like a browser extension that saves me a lot of time?
Certainly.
Yeah. So I actually found this recently I found an extension called Motion. I'll send you a link on it, but
okay.
It allows me to, it's basically kind of like a, like Facebook Messenger. They've got that little circle that'll, hover on your, well, I guess they don't do it anymore, but, would hover on your screen and you'd be able to pop it up there now. Motion is like that, but with my calendar, my contacts, tab manager, they have a distraction blocker for when I'm trying to work on my, on various stuff. But, it allows me to pull up my calendar, allows me through this little thing to, quickly pull up what tabs I have open. The distraction blocker is pretty nice for when I really want to focus in on stuff. So I only found it recently, so I'm still getting settled in with it. But okay. I would definitely think that it's something that's been able to save me enough time to where I felt fine paying $100 and some bucks a year for the subscription. Other tools, I think I have I have a great one called Loom. Loom is a great software that allows you to collaborate quickly with your team. It allows you to basically take quick videos of your screen with you narrating and talking. So like if we have a tech problem with our website, or we're trying to figure out how to get a client their login, they're having issues with it, we can actually just record a quick thing. It'll clip it to the cloud, give me a link, and I can take the link and can drop it into Slack. And it's a much quicker way for me to show my team like what I'm working on, what the problem is, instead of having to type it out and narrate it. It's a quick video. Yeah. So both are great tools. I've definitely been using Loom a lot longer than Motion, this other Motion app, but both of them have saved me countless hours in either working with my team, managing my schedule, just everything.
Yeah. So Loom, Loom or Lum?
Yeah, Loom, LOOM.com, like fruit of the loom.
Okay. Oh, okay. Great. All right. Well, yeah, check those tools out. We're always looking for, time-saving devices or things to make our life easier. So that's great. So now I know who your client is. Your client's somebody that wants to borrow money or looking at buying a business capital, but kind of give us a brief overview, who do you work with? How can you help them? And then also just, kind of in the midst of all that, why does it make sense to go through a consultant like yourself instead of just trying to do this on your own?
Yeah. So I guess I'll characterize, the ideal business owner of someone I would work with is, ideally someone who needs between $100,000 and $5 million in assistance through SBA financing. Ideally they have a company that's netting them, between $100,000 to $2 million a year, sometimes more. And, they need help trying to find what the most efficient capital solution is for their business. And that can cover a broad range of things. I have clients we're working with, they need $200,000 so they can go buy, right. Like they're a trucker and they're like, I'm leasing my truck right now. I'd rather just buy it. I would go from making what I'm making now to, making an extra 60, 70K a year if I just owned the truck. I don't need that much money. I just need 150K to buy the truck out. So we work with guys like that. Those are super easy to finance because they're, relatively straightforward loan requests. And, the SBA has stuff in place for expedited approval and underwriting. if you need a loan under $350,000 and you do it through an express or a 7(a) small loan, that can get closed and financed in less than 3 weeks from application to funding. So, we do a lot of those, smaller under 350K requests because those are simple. And, a lot of those people, they're not finance experts. They're not experts on banking. And I guess that kind of gets to the other question is, why does it make sense to work with a consultant? Well, I tell people there's 3,500 plus lenders out there that do SBA loans. Do you want to go call all of them yourself and figure out who's going to be the best for your project? Or, do you want to work with someone who's been dealing with it for 5 years? And, instead of you taking 3-4 months of your time talking to all these lenders, trying to figure out who's giving you good info, who's giving you bad info, just have me look at the request. And, I already know everyone out there. It's going to take me an hour of my time to go set up a call, pre-screen it, talk to them about what your financing request is, match it up. They'll give you a term sheet in a few days. You get financed, closed a couple of days later. The time saving for people is often a big thing. The other thing too is by working with a consultant like me, when I refer a deal to a bank, they generally know that it's being shown at least 1 or 2 other banks. So they're not automatically going to come out and charge the highest interest rate they can. They're going to try to be competitive. And, if I tell the bank like, hey, listen, the borrower is interest rate sensitive on this, they know they're not just going to slap on the, because most of the time, most people, they go to the bank, whatever the first terms are from the first bank that gives them an approval, they go with it. They don't think about, well, hey, maybe we should think about a fixed interest rate instead of a floating one. Maybe we should try negotiating the rate down. 0.5% of interest on a $1 million, it's still $5,000 a year, right? So, all those are just little things that, over the life of your loan, you can end up spending, tens of thousands of dollars in extra costs just because you didn't negotiate it correctly on the front end. So it's a twofold thing. I'm there. I'm going to help save you guys a lot of time as a prospective borrower by making sure you're set up with lenders that are actually going to finance your type of business and your size of request off the bat. But also, generally speaking, when lenders work with an intermediary such as myself who handles a high volume of these kind of loans, like they know that anytime I'm sending them a loan, someone else is looking at it. So they're not going to just quote you the highest rate out there. They're going to give you a competitive price and, make sure you get the best deal that you possibly can.
Yeah, and I'm sure they also understand it's less work for them. So it's kind of, you kind of streamline it for the bank. They're not having to, continue to go back to the client for this and this. You can generally make sure everything is in order before you present that to.
Yeah, that's the other thing too. I do bring a lot of value to the lenders because if you ask any SBA banker, they make great money for all the loans that, if they do a lot of loans, they make great money, but 90% of their time is going back and forth on email chains with borrowers. Hey, where's this document? Did you send me this already? Oh, you sent me the unsigned copy. Send me the signed copy. That you missed a signature here. It's like all this back and forth. And so, what I tell them is say, listen, the banker's going to have a lot easier time dealing with you. You get this all done up front. I give them the checklist of what they need up front. I let them go take a week, putting it all together, put it in a Google Drive. I go through it, make sure it's 95% completed, mostly there. And then when we get set up with the banker, everything goes a lot quicker. So, that's the other thing. The bankers like working with someone like me who is educating the borrower and helping them make sure they get everything together before going, because 90% of the time that bankers spend working on these deals, it's just chasing documents,
Right.
going through email chains and following up with people, and it's not a very efficient process. I've got a long-term project that I'm working on software-wise that I'm hoping will help automate a lot of that for a lot more borrowers than just outside the people I work with, but yeah, that's a big headache, document fatigue with bankers and borrowers.
Exactly. All right, Josh. Well, tell people how they can reach out and get a hold of y'all there at 7A.
Yeah, so I'm sure we'll put a link down in the description below for the podcast. You can reach us at 7aaccelerator.com. We're putting a lot more information up on the website, other interviews, other blog posts that I'm doing, just talking about incentives and stuff. Obviously as we get, every case study we can get, we're putting it up there so you can kind of see the people we work with, the types of deals we've been able to get, done for our clients. But yeah, 7accelerator.com. There's not 2 A's, it's just 7accelerator.com. That to make it a little bit easier for people to find. I think if you type in 7A Accelerator, it actually redirects to our site. We got both domains, but but you can find us there. And we've got a ton of content and resources on the site. You can learn more. If you're interested in reaching out further about possibly having us consult for you to help you find the loan that's best suited for your business, you can always book a call with us. Just let us know that you found us through Roy here, and we'll definitely be able to hook you up. But yeah, we'll 7accelerator.com, and we'll put a link in the description for the podcast, I'm sure.
Yeah. Certainly. All right, Josh. Well, thanks a lot. Y'all reach out to Josh, see if he can help y'all with your next business loan there. That's going to do it for another episode of the Business of Business podcast. You can find us on all the major podcast platforms: iTunes, Google, Stitcher, Spotify. Also, check us out on our website at www.thebusinessofbusinesspodcast.com. Also, on all the major social media, and a video of this interview will go up on YouTube when the episode goes live. So, until next time, take care of yourself and take care of your business.